Higher time frame is simple. Just do this. So in the last video, we talked about the simplest daily bias video that you guys can use. So if you haven't watched it, make sure to check it out first. The link is going to be in the description because you will need that information in order to follow along and build on the idea. Now, for those of you who don't know who I am, here's a quick intro and why you should listen to what I have to say when it comes to the markets. So first off, I have over 6 years of experience, and ever since prop firms have been around, I've been able to kind of get multiple payouts. I have accumulated over 6 figures in total payouts. You guys can go ahead, scan these codes just to make sure everything is legit. And I just recently passed, again, funding PIPS certification right here. A bunch of payouts with True Forex funds. I think with True Forex funds is probably around like 30 to 40K in terms of total payouts. And even, when trading own personal capital, able to do different types of account flips. This one was my biggest one to date, which I was really a big on before prop firms came around. So again, guys, just wanted to show you that there's validity to what I'm talking to because there are results behind the concepts. Now, I also give my trade ideas for free to showcase the concepts that I use on a weekly basis, just so you know that it works. Join the free Telegram. The link is in the description below, and make sure to subscribe because we are going to unveil so many different ICT and SMC concepts on this channel. Now, let's go ahead and let's get down to business. So just to kind of brush up, we talked about the bearish engulfing bars, bullish engulfing. I'm going to use this example here. Nonetheless, again, price that just sweeps and closes back below. And I also referenced this as well, where, let's just say we get that type of candle and we get it at some sort of higher time frame premium level. We typically will get some sort of raid on the prior candle and we have a closure below. This indicates that anyone who bought above that candle's high is now trapped, and the candle closure, which is the important part, indicates that there was displacement on this specific day. This is important because if people are trapped, because they typically will buy above weekly opens, or they'll typically buy above a daily high. So if we know people are trapped and there's a massive displacement, we understand that the market has a likelihood to head lower, especially if it's at a higher time frame premium. Now, again, we look for that next candle open to kind of hit the 25%, the 50% mark before heading lower, and then ideally into that discount level. So now many of you guys have asked, how can we create a full trading model around this with entries, stops, and targets? And we will cover that all today. But first, let's analyze something real quick. Now, we know if you guys have watched any of my liquidity pool videos, I talk about key liquidity pools, which is daily lows, weekly lows, session lows, monthly lows, and highs. Now, understand the anatomy of the engulfing bar, right? If people are trapped above here, the market has a strong closure, which indicates displacement, and then the market forms a low. If this is a weekly candle, daily candle, 4-hour candle, ideally we have this low marked up for the bearish side, and we have that high if it's a bullish engulfing. Now, we obviously want to see this occur. The goal is to ideally get a PO3. So that's the power of 3, where the candle has an open. The candle has a push up, which is essentially the manipulation move, and then have the expansion move lower. So ideally we get that in the next candle. Sometimes it might be the next 2 or 3 candles, depending if the market kind of consolidates, because sometimes the market will consolidate inside of that candle's range and then have the expansion move lower. But nonetheless, we want to see that candle have an opening, push up into some sort of key level, so any sort of resistance. So if there's a fair value gap in here, that's around the 50% mark, 75% mark, 25% mark, and we want to just see the expansion candle lower. Again, depending on your time frame, if this is daily, weekly, you're going to have a very strong low that you can go ahead and target, and the range is going to be a very solid range, because if this is a weekly candle, and depending on how far the market trades up, you can get a nice 50, 100, 200 pip move depending on what you're trading. So here's a simple guide to looking for PO3 on the lower time frame. I made this and I posted it actually in my free Telegram. So if you guys are already in the Telegram, you've already had this. But now I want to go ahead and I'm gonna make a separate video. So let me know in the comment section if you guys want me to also talk about this very concept and how to do a top-down analysis approach. We're going to talk about it very briefly in here, but this is what I really want people to understand. So let's just assume that this is a daily candle, and let's just say this is an engulfing bar in here, and then we have that next candle. And if we're anticipating the price open, we want to see a price push up. And this is the midnight opening price. Now for intra-week, so let's just say if this is a weekly candle, you just use the weekly opening price, which is, whatever the price opens around midnight during Sunday going into Monday. Now, I'm just going to use a daily bar just so that we can, stick with one. However, it's essentially the same idea. What typically happens is for the daily candle, we want to see the midnight opening price, so 12 o'clock Eastern time. Then what we want to see is we want to see the market move up into a reference point from the prior day. So, and think about this daily candle. There's going to be around, if this is an engulfing bar, we're going to have a reference point. So we're going to have a fair value gap somewhere around the 25, 50, or 75%, maybe somewhere in there. We want to look for the midnight opening price to have a move up into that level inside of our kill zones. That is very, very important. So kill zones, that could be the London session. London session is about 2 to 4 a.m. Eastern time. You could be during the New York Open, my favorite time window, 7 to about 10 a.m. Eastern time. So again, as long as we get that type of move, and then we can look for the backside move and then the expansion for the move lower. And if we have that candle's low somewhere around here, it's even perfect because it gives us enough of a range to target that candle low. And again, if there's like a PD array somewhere around here, a reference point, we can look to target that as well. Now again, here are the reference points. This could be a liquidity pool. So maybe inside of this candle, there's maybe a New York Open high in here. It could be a fair value gap. It could be an order block with a fair value gap. It could be a breaker block. It doesn't necessarily matter as long as it coupled up with the kill zone and we start to see lower time frame rejections. Yes, guys, I know it sounds like, oh my God, this is too good to be true, but I promise you it can all be this simple. Let's take a look at some examples, and before we transition into the charts, make sure to subscribe and like this video just to make sure that your next trade hits TP. Alright guys, so let's go ahead and we're going to use an example that was pretty recent here in $CAD. So with $CAD, we're inside of a bullish structure, right? The market was showing bullishness with taking out lows, pushing to new highs, taking out liquidity into key areas, pushing up higher. So from this candle low to that candle's high, we have a price range. Price comes down into a discount. So from the higher time frame, we have a solid framework. Now, what do we have here? We have a solid bullish engulf candle. Now, this one isn't the most ideal because I typically don't like when the candle kind of forms inside of like this premium level. Even though I was bullish $CAD, everyone who's in Telegram knows we were looking for bullish prices on CAD into this high. Nonetheless, I don't necessarily like when it kind of fills the imbalance point, but nonetheless, this was a very solid example. And so first of all, we mark the candle's high. So obviously we have a bullish engulfing because this candle took that prior candle's low in here, and you guys can kind of see it. Price has a strong bullish close above this candle's opening price and the closing price. Now, again, not the most ideal that it hit a higher time frame reference point. Like imagine this fair value gap was like up here. This would be even better because it would have more potential push to reach up into that reference point. Nonetheless, we mark out that weekly candle. I'm sorry, this should actually be a daily candle high. So we mark out that daily candle's high. Now, we obviously want to go ahead, draw the fib. And for the people that were asking for the fib settings, here it is. Again, 0.5, 0.25, 0.75, it marks out the ranges. Now, what do we now look for? As I kind of spoke about in the presentation, we want to look for that true opening price, the midnight opening price. We want to look for a move below into a key reference point. So let's go ahead and let's get into that. So I go down to the lower time frame. So let me start off actually on the 4 hours since that was a daily. This is how I go my top down analysis. And again, if you guys want a video on that, let me know in the comment section. I'll make a whole video on top down analysis. So I can clearly see we have a fair value gap here on the 0.5, and we have a fair value gap here at the 0.75. So the 75% mark and the 50% mark. Now the key components, I want to see price hit it again. What were the key metrics? It has to be during a kill zone, and it has to be below the true open, which is the midnight opening price. So let's go, and we'll go ahead, and I'm going to go on the 30-minute time frame, just because for some reason this indicator doesn't work on the hourly time frame. So let me just go ahead and market this out so we know we have our two key reference areas, right? The 0.50 and the 0.75. So I'm going to delete this. Perfect. Now, I know people are going to ask for this indicator. This indicator is right here, ICT kill zones plus pivots with TFO. And if you guys go ahead, it pretty much, it does a bunch of other stuff, but I just use it for the true open. So again, that's that midnight opening price, and it just has that label out here. And I also use the Asian session range, which again is this indicator in here, ASFX. And again, this is just so I can mark out my specific time windows and sessions. Now we go ahead and we have our session windows, and I'm going to go ahead and mark the London session as well. So 2 to 4 a.m. The New York session, if we'll forget about this, we'll put the New York session 8 to 9. The New York session realistically is 7 to 10, but I like to look for setup specifically in this 1 hour time window. Video on that later. Nonetheless, we play this out. So now we have that true opening price. Price has a move lower, but again, the time window started, and now we are seeking price to potentially hit this area. Again, let's go back to it. It was a 4 hour fair value gap. So we have a very key reference point. We have a daily high that we're going to look to target. And now we're getting our potential entry inside of this time window. So now price goes ahead. We drop into that fair value gap right at the outset of the London session, and then price pushes away, and we kind of play around this area for a little while. So again, now we're inside of the New York Open, and we're going to see how price has a beautiful push higher on the news event right at this level. So what are the key components for the setup that we talked about? I'm going to remove the session just to make the chart a little bit cleaner. We had the true open price, and price hit it right outside the London session, which is fine. However, it comes back one more time, sweeps that low into this fair value gap on the higher time frame, and then has that move higher. And again, this was inside of that time window, 7 a.m. right here on this candle, and then price had a push up right at the 8:30 candle during a high impact news event. And the reason why I have the Asian session, again, because this is why I like to see this. I want to see the Asian session high unviolated, so then we have a move below the true open. This move right here is the manipulation move. If you guys aren't familiar with the Judah swing and ICT Asia range, let me know, and I'll go ahead and make an in-depth video on that as well. But again, this is the manipulation move into our key level. Now, because this high is still untapped, we also have a little bit of an imbalance here, and we have that high. We can look to target, okay, this could be potential target 1. This could be potential target 2. This is how I identify my ranges, because sometimes price might not hit our TP. However, if we get a move like this, we should be able to capitalize. Now, when it comes to entries, realistically speaking, you could just be if price is coming into a key level during a specific time window and you're not the type that likes confirmations, you could simply just take an entry around that level, maybe the 50%, and then put it beneath the swing low. So it was around the H4 swing, something like that. And then maybe you target this. And again, even without any quote unquote confirmation entries, you get a nice 3.71 RR on this trade. Look at how price taps that the daily high, and we get a beautiful, beautiful trade in here. Now, again, guys, this is just one example, but go through the charts, and I'll probably post a little bit more examples in my public Telegram, and then post extra additional videos on my website. So make sure to check the Telegram. I'll keep you guys updated. But again, using these two in combination, the true opening price move below it into the engulfing candle at some level, and then price expansion higher. Now, if you guys like this video, make sure to subscribe. I have so much more content coming out, and I can't wait to share everything that I know that I've gained my experience over the last 6 years with you guys.